Welcome to another episode of CXO Perspectives, powered by FinGig.Pro, where we explore the ideas, insights, and innovations shaping leadership in financial services. My name is Francis D'Souza, a co-founder and CEO of FinGig.Pro, which offers financial services companies, including banks across the world, access to a curated pool of highly accomplished CXO level domain experts on a part time, full time, or a flexible basis, including on site, remote, or hybrid models. With me today is a friend and longtime colleague, Nicholas Wood, co founder and director of Augury Insights, a global leader in treasury capability development and simulation based learning. And today, we're diving into the heart of every financial institution, the treasury function. How is it evolving amidst regulatory shifts, the AI-driven digital transformation, and the demand for real-time decision-making? Nick will share his extensive experiences, expertise, and insights, and how his company complements FinGig.Pro's Solve for CXO framework, helping clients build stronger, smarter, and more agile finance and treasury functions. Let's get started. Welcome, Nick. It's genuinely great to chat with you today.
Yes, great to be with you, Francis, and thanks for this invitation.
Look, a pleasure. Now, honestly, Nick, I don't know too many young people who grow up wanting to be bankers, much less treasury specialists. And you've been one now for over 30 plus years, right? How did this career choice come about?
In a way, in the UK, where I studied in Manchester and did an economics degree, there's a bit of a pilgrimage if you're brought up in the UK, and that pilgrimage is to London. And London is where the jobs are, and the city of London is where sort of the financially attractive jobs are for the upwardly mobile and ambitious people. So I basically started with actually the biggest bank in the world at that time, which was Bank of America. And the balance sheet, amazingly, was only around $100 billion, which is amazing when you think that the JP Morgan now is $4 trillion. And that's not even the biggest. The Chinese banks are even bigger. But at that time, Citibank and Bank of America were the two big guys. And so I started my career in market risk with Bank of America in the city of London, just opposite St. Paul's Cathedral. And I've always kept that passion for the job. And why? Because it's right close to the trading room, which is one of the most exciting places in terms of banking business, in terms of minute-to-minute, second-to-second action. And it also really gives you the best insight into the brain and the heart of banking. So it's been a passion for me. It continues to be a passion, and I never get bored with it.
That's great. And look, when you started off your career in banking, was it directly in the treasury function or did you end up there after a while?
It was immediately in group market risk. And at that time, it was 1978, 1979. And at that time, group market risk functions were automating for the first time. So my first job was really putting in automated reports, which are now very common, obviously, across all platforms there. They wouldn't dream of having manual reports. But that was the stage of transition from manual to automated across the foreign exchange, interest rate, liquidity risks, which are the same as today. But it was the very starting point of automating those reports, getting the information through into the risk takers and risk managers as quickly and as accurately as possible. And it's an amazing time, Francis, because at that time, the way in which you communicated internationally was through telex or telephone.
Yes, I do remember that.
And it took an enormous...
telex.
Exactly. And so it took an enormous amount of time, in today's terms, seconds, to exchange information between Tokyo and London, for instance. So you can imagine, if you're in the trading business, the advantage you can get from having that information a second earlier or even 2 seconds earlier. Now, the time gaps were even bigger in those days. And so the technology and the shortening of the time, the latency, particularly in terms of the communications, was everything. And so that was how I've brought up in that era of speed matters, accuracy, of course, always matters, and getting information very, very quickly and acting on it. Treasury people don't tend to just sit there. They tend to get the information and act on it, which is another attractive reason for being in Treasury, I think.
Well, thanks for that. Also, I think you mentioned starting off your career with automation, which is interesting because we're going to talk about AI. And of course, technology has changed so much since those days and plays such a crucial role. But more of that in just a while. Now, Nick, you've had truly global experience. I was looking through your LinkedIn profile. It spoke of Indonesia, the USA, even UK, and then across Asia, Africa, the Middle East, with Standard Chartered Bank later. Looking back, which country-specific experiences stand out for you, Nick, in any sense, either learning or any other aspect of it, as you look back on your career?
Yeah, I think you get very rich experiences, and they may be good or bad, from dealing with emergencies and crises. And so when I think back, I've actually covered so many crises directly. So when I joined banking around the 90s in London, we had the oil crisis. We had Fed funds rates at 20 to 21%. We had rampant inflation, and we had a lot of volatility in the markets at that particular time. And I remember in this particular bank, Bank of America, being such a large bank, it had a lot of actually frozen assets from Iran and other places. So there was all of the kind of learnings around, you've got this geopolitical and economic and monetary crisis, and you're seeing it play out in real time. You're seeing the personalities even arrive at the bank to deal with this situation. So it becomes extremely memorable in your mind. So I kind of trail it from crisis to crisis. So that was my first crisis. I then got given this job in a very early age as treasurer in Indonesia, 1985-86. And to be honest, I was in my learning stage. It was my first treasurer job. I'd come out of a advanced training program, which had taken me from Singapore to San Francisco, trading a lot of different instruments. And then I was thrown into Indonesia, into the deep end, to run a trading room, etc. And I remember we had a 37% devaluation. Well, that's quite a handful for a raw treasurer to get.
Was this
1985-86? I think it was in 86, actually. And so that was an experience in dealing with the unexpected. Now, here's the thing. Do you think you deal brilliantly with the unexpected the first time it comes around? No, you don't. You don't. You make a lot of errors. So what really was then a very memorable time for me was when I went back to Indonesia in 1997 to 1999 with the Asia financial crisis.
Correct.
Because for me, this was the chance to go back and really do it in the right way. And so by the time I went back there in 1997, I was quite, I would say, deeply knowledgeable in the business. I was ready, absolutely ready. And so when I went back there, it was extremely memorable because 1,000% overnight interest rates, a devaluation from 2,800 to 17,000, all kinds of volatility, massive interaction with hedge funds in New York at night, with central bankers, with the IMF, with counterparts, with staff, riots in the streets at one stage. So that was everything, if you like. Everything was thrown into that one experience. And I learned so much, and it was a very successful experience as well. Of course, it was traumatic. There were a lot of sad stories associated with it. But from a career knowledge point of view, I learned massive amounts during that. And then when I went to New York to be treasurer, and actually I was working in World Trade Center 7, and I was transferred from that job at the end of 2000. And so I was in London when we had the World Trade Center attack. And of course, World Trade Center 7 was the third building to collapse. And of course, everyone got out safely. In the case of our bank, to a business continuity site. So one of the great learnings of that was the values of having business continuity practiced, ready to go. Because without that, in that situation where your building has been completely destroyed, it's gone. There is nothing. So interestingly enough, my first job when I got to London after that incident was setting up a BCP, or being the business representative on it, for global markets in London. And it was to prepare for a potential dirty bomb. And it had to be at least 15K from the City of London. So it was located in this place. I won't mention the name, but it was located in this place. And the lines all went along the tube line. So we were following the tube line with these lines to make sure they were in the safer place as possible. And setting up a BCP site. So to cut a long story short, and then global financial crisis, of course, I was in London for that. And COVID. I mean, we're not over crisis. COVID, I learned a lot during COVID, having at that stage left the banking and learned the value of late adopters to technology. And we all caught up very fast during that particular time. So to sum it all up, deepest learnings, richest learnings in crisis. Not always good learnings. Sometimes you were caught short because you weren't sufficiently knowledgeable, technically qualified at that time. And then you've got to make sure if ever that comes again, you've got to nail it. You've got to learn the lessons from those experiences and use them and be better next time.
My God, you've had some fascinating experiences, Nick. If I might ask, since you spoke of BCP, what is the one contingency that seems the hardest to prepare for? Is it technology-related outages or breakdowns where it's very hard to have a backup?
Yeah, absolutely. It's related to business disruption. So if your technology platform goes down, your ability to input a transaction in a deal booking system, to actually see what your positions are, to see where your limits are, to communicate, it's a very, very basic capability which has to be in place for you to continue doing business. So knowing that you can very rapidly go to the alternative location, alternative site, switch to that fully ready site with all the platform there, all the positions, everything up to date, that's what you need to have. And on this point, Francis, the interesting thing is that what I'm doing now, one of the unique things that we offer now is what I call integrated crisis simulation.
Right.
And what you don't just test then a business continuity plan, you test liquidity, you test everything in one plan, all at the same time. And that's what reality is really like. It's not, oh, let's have this business, then let's do separately this liquidity, then let's do separately this capital, then let's do separately this interest rate. It's all together.
Right.
So to really dress rehearse and war game actual fire drills is a very important area. And that's one of the areas that I'm currently offering and working on delivering to crisis management teams in the region.
Thank you for that, Nick. Take care.